All right, thanks for staying with us. This is breaking news on ET now. The newsmaker of the moment clearly is Kotak Mahindra Bank. The board has just approved a mega fundraising plan. But the question which we have been discussing and debating from last 2 days is that why is Kotak Mahindra Bank looking at raising capital? Because their capital adequacy norms are very good. So to understand that and to dissect this puzzle, I have with me two fine gentlemen who have all the right answers. Deepak Gupta and Jaiman Bhatt, CFO and Joint Managing Director, they both join us. Gentlemen, good afternoon to both of you and thank you for joining us. Mr. Gupta, let me start with you. I have your press release in my hand and it says that the purpose of raising equity is to augment Kotak Mahindra Bank's capital base for the following reason: consolidation, to participate in bad bank, digital expansion and growth subsidiaries. Now, these are very broad-based parameters. Can you be slightly more specific on what was the immediate need to raise capital?
Well, I think the basic requirement stems from RBI's communication towards dilution of promoter stake. We have initial dilution requirement to, if you recall, 30% by end of June. And we have a communication from the promoter that there is a partial dilution which the promoter has already done, and we need to, progress forward. So one of the primary considerations for this really has been the need to bring about the promoter dilution. And while assessing that dilution requirement, we've also been looking at what all can these funds really be used for, and we have a reasonable array of end uses which are possible going forward. And I think the first one really is the fact that we will continue to be consolidators in the financial services space. So whether it is banking, it is other aspects of financial services, broking, maybe NBFC businesses, whatever it is. So that will require, equity going forward. The second big one, of course, is really requirement for equity, from the stressed asset space. I think there is a lot of opportunity which is likely to come up in that space, and we would like to have a reasonable amount of ammunition in place, in store, to address that opportunity going forward. Plus, in addition to, I think, these two, there would be, on an ongoing basis, the subsidiaries will require equity. Some of our investments will require equity. So there are two parts to it. One is the immediate need for meeting the requirements under this communication of RBI and for the dilution and the usage of that money.
Jaiman, can you also confirm to us that how soon the QIP would be hitting the market?
We will evaluate the options which are available to us. In any case, this requires a shareholder approval, so this will go for a shareholder approval sometime. And thereafter, the approval as per regulations would be valid for a year. So we will evaluate once we have the shareholder approval in hand.
Can I safely assume, Mr. Gupta, that the immediate need right now is to bring the promoter holding down, and if there was no pressing hurry to bring the promoter holding down, you would have not gone ahead with the fundraising plan?
Actually, that's not the right way probably to put it. I think the right way to put it really is we are going ahead with an enabling resolution which gives us the opportunity to raise capital for a varied set of purposes. You don't want to rush into wanting to raise capital when there is an opportunity on the stressed asset space. So, we're just getting armed well in advance. And yes, it happens that it also helps us to meet the communication of the RBI.
I've always learned from my banker friends that you should raise capital not when you need capital, but when markets are hot and the stock is at an all-time high and market conditions are also right. But Mr. Bhatt, my next follow-up question is that once you will finish with your capital raising exercise, and given that the credit growth in the system is still slow and your tier 1 capital already is in abundance, I'm sure in the short term it will have an impact on your return ratios. How are you planning to work on that?
Now, if you look at it, the total capital which we are talking about, even at the full number, is a dilution of 3.3%. So it's not a large number. And in any case, while we talked about the fact that last year we had the integration going on, and to some extent that put a slowdown on our growth, we put the integration behind us, and as we look forward, we do see great opportunities of continuing our pace of growth and seeing a faster growth in the year ahead.
Mr. Gupta, assuming that you are not able to find any suitable inorganic opportunity, I am using my words rather carefully, do you think this current capital requirement, whenever you conduct it, that will be enough for next 2.5 to 3 years?
Well, you're putting words into my mouth by using appropriate words, So see, again, it is not about only an inorganic opportunity, okay? Yeah, that is, yes, one of the potential uses. It could be one or more of these multiple things which we mentioned about. It's difficult to see which one would be first, which would be second, which would be there at all. But among these 3-4 key ones, I think we believe there is a fair requirement over the next 1 year for this capital.
I must only add that whatever we are doing with the capital, as in the past, we will always be conscious of deploying it in a situation which is value accretive.
I appreciate that, Mr. Gupta, but my next follow-up question is on the fact that you are looking at participating in resolution of stressed assets. That also means that you have a rather positive and a very vibrant outlook for the economy. I mean, if I take the clock back in 2015 and better part of 2016, Kotak Mahindra Bank was not lending aggressively because they were worried about the global and the local economic conditions. But can I safely assume that your view has changed now?
Well, you are right to a large extent, because what happens really is, sale of NPLs typically tends to pick up just at the early part of a cycle moving upwards, really. Yeah, because that's the time when a lot of lenders want to sort of, get easy on past outstandings and move on in terms of meeting growth requirements, really. Yeah. So I think we are looking at an environment over the next, I'd say, 6 to 12 months where you will find a lot of stressed assets being available for sale and hence acquisition, really. And yes, that is a portender of, good growth opportunity going forward.
Mr. Bhatt, Mr. Kotak certainly set cat amongst the pigeon when he mentioned that if the sooty stake in Axis Bank is on the board, we would be open to buying it. What was he trying to indicate? As members of press, we love to read in between lines. Should I read in between lines here?
No, we will evaluate every opportunity which comes in. So as and when it is there, we will evaluate at that time.
But would you be interested in acquiring, stake or minority stake in other bank?
We will evaluate that. I mean, I'm not saying which we are in there or not there. We will have to take it when it comes.
Even that's a decision which the board has to take as and when that opportunity arises. But I think beyond that, don't read too much into two lines, really.
Mr. Gupta, there was a lot of buzz on what could be the next inorganic move from Kotak, and you'll appreciate my curiosity. I know you will not like to comment on market speculation, but we often say in markets that there is no smoke without fire. How would you like to douse the fire?
Well, on our side, there is no fire, so there is nothing to douse from that perspective, really. No, you see, again, as I said, these are opportunities which will keep coming, and it is not that they are not there. They will keep coming, and it is appropriate for us, and we do keep looking at them from time to time. And if there are something which is attractive, appropriate, makes value sense from stakeholders' point of view, of course one will look at it. But beyond that, there is nothing beyond that, really.
To clear the air, and I would just to douse all the fire, if there is sooty stake available on the table, would you be interested in buying it?
Well, as again Jaimin just mentioned, one would like to evaluate it, and ultimately that's a decision of the board. But I think we would be wanting to evaluate an opportunity like that if it comes.
Jaimin, a very common concern which I get from some fund managers and some analysts who track your bank is they are of the view that Kotak is a very retail-focused bank. The liability franchise is not very great. If the economy turns around, they will not be able to participate in the new capital cycle. Is that a very valid concern?
I don't think so. If you look at liability franchise, we have grown. Our CASA now is like 42%. And if you add the sweep, we are close to 50% in terms of our CASA ratios plus sweep. We have been growing savings deposit, for example, now for the last 4 or 5 years in the high 30s to the 40% mark when the industry is in the early teens. So we've been adding our retail franchises quite aggressively over the last few years. So that's been helping us, and we now have a pretty good cushion of retail deposits. If I track my deposits which are below 1 crore, that has been expanding. So we have been building up the retail franchise over the last few years quite aggressively. And the merger of ING again has helped that. We've now got a decent penetration across north, west and the southern parts of the country.
I think, Nico, probably if I were to add to that, you see, up until, I guess, a couple of months back, a lot of our strategy was focused on what I call mass retail. So there was an element of customer segment who you target at and what is the opportunity out of that customer segment. And we believed that mass affluent does give a lot of opportunity, and there is a lot of potential for us to grow in that segment. But like you heard Uday yesterday, I think digital changes a lot of that really. Yeah, it makes you independent, or what I call agnostic to individual customer segments. And I think we realize that and we see that opportunity, and we want to participate in a wider customer base and segment. Yeah. So you may be right in probably what you started off with your statement on liability base or retail base, but that was because we were very focused on mass affluent. But digitization, opens up a very, very different world. It for us, for example, technology does not really mean you focus only on a segment and not another. It gets your cost down to such a level that it makes good economic and business sense to focus on a wider target customer base. And that's what we intend doing.
Structurally speaking, are we likely to see an uptick in CASA and a drop in your savings rate now? Because if you are looking at reaching a wide spectrum of India, that obviously means that you cannot give such high saving rates.
The saving rate to a large extent is also dependent upon how much you think growth can happen. I think as long as the potential to grow your liability is high, and I put that high meaning significant higher than the normal growth rate of savings in the economy, it makes sense to give a higher savings rate. And then let me explain. A higher saving rate is, yes, higher in comparable savings rate terms, but the way we look at it is a saving in term deposit cost for us really. So while you are looking at one end of the coin, we are looking at the other end of the coin and saying, this is saving me money. So why worry about it? And as long as there is reasonable growth over the normal growth rate, it still makes business sense. So growing to a wider segment and continuing to give a higher saving deposit rate is not necessarily, counterintuitive.
I get the messaging there. So, Mr. Gupta, really closing comments from you. What is the framework or the white paper on bad bank? And my understanding is that Kotak Bank currently holds NPAs under a proprietary book. So, any plans that you are likely to change that?
Well, from a bank perspective, yes, it is proprietary because as a bank, we cannot issue security receipts, really. So whatever the bank buys, it really buys cash down. So that part of it is proprietary. But we have, a role to play in the stressed asset business segments through two other vehicles. One is through a subsidiary of the bank, which is really in the alternate asset space, which is done out of a fund. And the second one really is an associate of ours, which is really Phoenix ARC. So technically, we service the marketplace through three broad fronts, really. The prop part of it is in the bank, of course.
So, Mr. Gupta, I'm archiving your comments when you're saying that as of now, there are no inorganic opportunities on the table. You're open to acquiring stake from Sooty if there is some development on that front. But as of now, you're committing to us is that it is business as usual.
Nikunj, your statement is so long, I'll have to first write it down and exactly understand which all key words you use before I can answer that.
So let me make it very simple. As of now, no inorganic, growth opportunities on the horizon?
Specific right now, but we keep evaluating it as we go forward.
Okay, appreciate that. And gentlemen, thank you. Thank you for joining us. And on behalf of everyone from ET Now, thank you once again for patiently answering all our questions.
Pleasure. Thank you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.